Ladies and gentlemen, welcome back to the High Performance Trader. I'm your host, Joshua Salvetti, and today we are going to be breaking down pit numbers in a way that's going to change your life forever. And I want to break down what pit numbers actually do for me. See, pit numbers are the easiest tool that you're ever going to use, and they're going to change the way you view the market. Okay, pit numbers are previous day high, low, open, and close. Okay, these are your previous day levels, but they're so much more than just levels. Pit numbers are my main guide. Okay, when I'm trying to figure out the market sentiment or market conditions, when I'm trying to spot opportunity, I literally go directly to my pit numbers. Okay, pit numbers literally are my tour guide each and every single day on the stock market, and I want to show you guys how it is I use them. This is a trade that we took over here Monday, May 19th, 2025. Okay, very simple. We smacked SPX for over 63%, trading off previous day open print, targeting end of day. Okay, so you'll see here, this is pre-OP, previous day open print, and then here's end of day. Okay, now here's my long entries in between. I got one right here and right here. But more importantly, guys, I want to show you how I was able to confidently enter into the market long when most other traders were looking for shorts. Okay, and that's the main goal, is to stay objective. Right? Every single day, show up to the market in an objective state, meaning you're not trying to predict things. You are in the present moment, you're reading price action properly, and you're executing flawlessly. Okay, so number one, pit numbers. Number two, you need a strategy. Click that first link below in my bio. It's going to bring you directly to my website. This is my 3-step approach. This is how I get in and out of the market each and every single day. Okay, most traders fail to obtain consistency. It's not because they're bad people or they're not good traders. It's because they don't have a single strategy they stick to. On the contrary, they're all over the place. They're trading supply, demand, support, resistance, breakouts, this, that, and the third. They're switching it up. You got to stop switching it up. You need a simple approach that you could trust and believe in, and this is exactly what I offer to you. All you have to do is click that first link, read through this, takes about 5 minutes, not even, and then put your first, last name, email in, and I will send you high-level summary data reports on the strategy completely for free. All I ask is that you learn as much as you can from this so that you too can become the absolute best version of yourself on the charts. And what I'll do, what I offer, I extend to you is 20% off your first month if you come join my team. Okay, so take advantage of it, guys. Complete free resource, absolute phenomenal resource. All you have to do is take advantage of it. And if you want more information on the Discord, click that link below in the bio. Okay, so without further ado, let's jump back into this day, right? So the first thing I'm going to do is break down the pre-market plan. So you guys got to understand something. I've been trading for over 6 years. Now my main issue, well, what used to be my main issue, is I could never stay in the present moment. Meaning, I was constantly predicting price. I would form some unhealthy bias, right, or reason that I believe price was going to go down. On a day like this, it would be because we got all this selling in post in pre-market. Okay, so look at you. We have a chart in front of us. What are we looking at? Well, we're getting a lot of selling in post-market, in pre-market. So the old Josh would be like, dude, sellers are definitely in control. This thing's going to sink, right? And then I would assume price was going to sell off all day. Maybe I would hop in the market short here at previous day low, or maybe I would assume that sellers were going to defend previous open print, or whatever it may be. I was always on the wrong side of the market. Maybe this is happening to you. Well, when you trade with pit numbers, you start to realize it doesn't matter what the market does. All what matters is that you can objectively define what's happening when it's happening. Okay, so this is our pre-market plan. Basically, I go, all right, critical levels of interest is previous day low and 58763. Okay, bullish scenario, I'm watching for buyers to muscle through 58763, looking for bullish criteria off open print for longs into PDL. Ready? Buying pressure above previous day low is very bullish, and I'll be looking to target 59125 in end of day. Okay, this is literally Pre-market plan posted at 7:38 a.m. What am I saying? I'm saying if buyers can get above this level, I'm targeting pre-OP and I'm targeting end of day. Okay, it's that simple. If sellers control this level, I'll look to target 585 and then 582, etc., etc. So once again, there's two scenarios that can happen. They're both based off what happens at previous day low. This is the lowest price from the previous day. If I can figure out who's taking control of it, boom, the market's going to show me the rest. Okay, so now let's check out the chart here. Now, I just want to show you real quick, and I'll show you on SPY first. Okay, we took the trades on SPX. SPY, the charts are the exact same, but I want to just show you what it looked like on SPY real quick so you guys can get a better understanding. Okay, so the market looks something like this. We're getting a lot of selling in pre-market and we're below previous day low. So once again, what happens at this level right here is going to paint a mega picture for me. All right, initially I'm going, hey, if sellers hold this, I'm targeting 585, right? That was the pre-market plan. But what happens when buyers actually end up defending it? Okay, what happens? Check it out. Boom! Look at the massive buying that comes into the market. What do you think's happening right here? Well, let's talk about it. Well, there was a lot of people that decided to short this level, probably right here in pre-market. Okay, we know this because we're getting a large move down from sellers. Okay, now when price comes back up to this level and these sellers automatically, price rallies right back up to their entry and they stomp out of their trade, boom, price rallies. So you guys see how the pit number is the level of importance here. The pit number is the level that guides me, right? It's not even necessarily what happens at the pit number. It's just watch the pit number, okay? And based off market context and structure, meaning break and retest, right? We're going to understand, hey, if the market's bearish, sellers will defend this level. But if it's bullish, buyers will defend this level. And then once buyers take the level, it's a matter of me identifying healthy opportunity. Okay, so we end up taking a couple trades this day, and you'll see here, these right here were the profitable trades that we took. And just notice here how price rallies above previous open print, comes back down, tags it, moves up, tags it again, and starts to rally. So let me whip out the Discord so I could show you guys exactly where I got in these positions, and then we'll talk about them. Okay, so right here at 11:11 a.m., I'm posting in the market in longs, right? And just basically, real quick, just notice here what I'm looking at. So at 11:11, the market looks something like this, okay? Now, for everybody that understands my strategy, understands how important the RBI, GBI entry criteria is. So basically, all what that means is when we come and bounce off a critical level, step number 1, we look for a moving average cross, step number 2, and then step number 3 is the RBI, GBI entry. So you'll see here, here's a red bar right here at 11:05, and at 11:10, we get a bar that wipes the top of that candle. So at that point, this red bar gets ignored. Basically, all we're doing is looking for red bars to get invalidated. Okay, once price pushes above the previous candle, we enter the market long, and our stop loss goes directly below the red candle. Okay, so here's stop loss, here's entry, here's target. Boom, we get an extremely nice push up where we exit the trade, and then we look for another entry. Why do we exit the trade? Because look how far we get from the moving average. Every time I get extended from a moving average, I'm out of my trade, on to the next, especially in these market conditions. And all you real traders know, in these market conditions have been crazy. Okay, so that was our first trade. Our second trade, back in longs right here at 12:04 a.m. Once again, guys, I'm able to view the market this way all because of my ability to understand that buyers controlled previous day low. Okay, if buyers controlled previous day low, I was stuck on longs. If my EMA cloud was green, I'm stuck on longs. Okay, I'm trading with the trend. We do not predict, we do not assume, we do not make up scenarios in our mind. More importantly, we look to the pit numbers, we look to the moving averages, and then we find our RBI, GBIs to get back into the market right here, 12 o'clock, targeting end of day. Okay, so this was the trade that we ended up really crushing the market on. Got a beautiful red bar ignored, targeting EOD. And then just, that's it, guys. Then you target the next pit number. Okay, so what I really want and hope that you guys take from this video is that your mind is going to play tricks on you. You cannot always trust it, okay? The goal is not to always be able to predict what's going to happen. We're not Houdini, we're not magicians. The goal is to develop a repeatable way to get in and out of the market, right? In a way that doesn't stress you out, right? It's got to be clean, it's got to be simple. Okay, so over here at HPT, we break that down in depth. I hope you guys like this video. Make sure you hit a like, subscribe, send it to somebody that needs it, and more importantly, take advantage of the HPT cross. I'll see you guys in the next lesson.